Good afternoon, traders and investors. Hope everybody had a good day. The start of another beautiful earnings season. Well, not technically the start. We did have some bank earnings last week into this week as well. But the first of the very big earnings today, guys. It's on the screen right now. You already know it's Netflix. And look what happened on this earnings. So they actually missed. They missed pretty much across the board, right? Disappointing. It was a really disappointing result here. However, I listened to the earnings call a little bit, and they were forecasting for some decent guidance throughout the year. They did lower the guidance in the actual earnings report, but the guidance for the rest of the year, guys, didn't seem all that terrible in terms of residual customer growth and increase in revenues and increase in EPS. So I mean, we are coming in lower, but then don't forget, we are coming off some really hot comparables from the years prior, right? 2020 and as well 2021, early 2021, before Netflix kind of ruined the market several different times on their earnings there, Q2 and Q3, Q4, right? So it was this one was kind of, I would consider it a not that great report. However, we did make some plays on it, right? And just to start off with Netflix before we jump into the markets, right? So Netflix, what we did is we kind of did a extended strangle, right? So we wrote the 287.50 puts, which were trading at about 0.5%, right? 0.5% on in terms of the weekly remaining premium on the contract, right? I was able to get them for about $1.50, right? So $1.50 in the morning. For some reason, the stock actually increased. I was able to actually get them really towards the lower of the morning here, around the 331-ish, and then they kind of they rose all day. However, the premiums also increased into the end of the day. So that was funny. The premium, the contracts end of the day around 170, 175. I picked them up for 150, but that's normal. You get the increasing volatility into the end of the day. I just didn't think they were going to take the contract up that much with the price going up as well. That was kind of an anomaly, but it played out pretty decent. So what we did, we wrote the 287.50s, and we also did some call credit spreads, the 405s versus the 415s. And that was able to get us about 25 cents a contract. Not that bad, but the reason I did that, because the expected move was only about 6.5% from current price. So 6.5% would have put us right around here, right? About 310, 311. I wrote the put, which was literally 2x the expected move, because I wasn't expecting some massive surprises from Netflix's earnings, from what I'd been reading and from analyst expectations. So we weren't expecting some massive surprise. And to the upside, because you always got to be careful of the call credit spreads, right? Because the risk to the downside is defined. Stock can only go to zero, right? But the risk to the upside, this thing could literally moon and just keep running and running and running, and you get further and further underwater and it gets dangerous, right? So I wrote this one actually three full X off the expected move. 6.5% expected move. I wrote up 21% was the short side of my call credit spread. So you can see that right here, guys. Not, in the future, I will show the account details, the position sizes and all that. But for now, that's not really the point. The point is not really to show, the amount that I'm making and whatnot. That the point is to really show the strategy and how I'm making these plays, right? So all the plays that I show on the watch list and everything are all the plays that I'm still taking. As you can see, right, we talked about Bill yesterday. I don't think I brought up the AMDs, but the AMDs, the Coinbases, the end phase I've had now for over a week. I wrote those. The premium was so juicy that I just had to, right? It was paying me about almost 2% a week for 4 weeks, which was absolutely amazing when the stock was trading right around $200, right? So this was an at the money one. It was paying me about $11 per contract. That wasn't the first time I did it. I did it as well previously. We'll get into that another time. But as you can see, guys, Netflix right here, 287.50 put, right? Last traded price, like I was saying, right around 175. I got it for about $1.50 here in the morning. I also got the Netflix bear spread call, right? So this is the spread, 405s and the 415s. As you can see, it was about 24 cents after, I got it 25 cents, but after commissions was about 24 cents per contract, per spread, essentially, right? So we were able to lock in some good profits because both of these tomorrow will be absolutely worthless. Now we've got through the earnings volatility. We've gone through the earnings call, and the stock price is exactly where it closed. So that's the beauty of writing options, guys. You know what I mean? When you write options, it's very good. So everybody who bought options tomorrow will be worthless, but they lost all the money, right? So I'm the person who actually sold those contracts to all these people that thought it was going to run 15% in one direction, 20% in the other direction. Well, unfortunately, now they've all lost money, right? They've all lost money because you can't sell options after hours. So they weren't able to lock in any profits off of this massive move to the downside. If you would have been short net shares, you could have had a very, very decent window to profit. But any options contracts, guys, will now be completely worthless. And that's good for people like myself who write options. But you got to be very careful with it, right? Don't get too greedy with options premiums. That's the real secret, is to not get too greedy with it, right? You saw the logic behind my decision, where I wrote my strikes. I didn't write my strikes to go for maximum greed on the premium, right? I wrote my strikes in a fashion that I was putting all the probability on my side that they were not going to get hit. So those options were around 95, 96% probability of success, meaning that I was 95, 96% guaranteed that they were not going to fill my positions by the end of the week. And that's exactly what happened. So that was lucky. That's Netflix. I hope you guys all did well. And for the people who may have potentially lost some money, I mean, I don't know how you would have lost money unless you kind of either, panic sold, which is very unfortunate. That could have happened, right? But I hope everybody had a good time on this. And we're going to look forward to the rest of the earnings, right? So let's go through the markets today. What happened in the general markets? Well, as you can see, guys, another kind of non-eventful day, right? Really, really non-eventful day. We're kind of still just grinding higher here. I mean, we did have a sharp move down here in the morning after a gap up open. You'll see it better on SPX usually, right? So we had really a gap up open, and then it came down all the way to fill the gap, and then grinded the 1 hour EMA higher all day pretty much. So we kind of ended flat on the day, really. Bit of a non-event day on the SPY. What was kind of notable to me is this is the first time that this has happened in a while, to where, well, now you can't see it because now the percentages have all changed. But if we go back to the 15-minute, right? Three major components of SPY: QQQ, technology; XLF, financials; XLV, healthcare. So if you look at these charts on the 15-minute, right? The start of the morning, look at this. Net drop, and net drop, right? So healthcare was the quickest to actually recover this. QQQ dropped, stayed flat all day. Healthcare dropped and stayed flat all day, but financials, we did get a bullish rotation into the end of the day. They had some earnings this morning. We had Goldman Sachs, right, reporting earnings for financials. They were obviously a large component of the drop this morning. The other banks really didn't move too much off of this. You can see Morgan Stanley, JP Morgan, really didn't have the same move as Goldman Sachs at all. Bank of America did come down a bit, recovered in the end of the day. Wells Fargo really didn't see it at all. So it was really only Goldman Sachs that got hit, but they had direct earnings, right? So that was the impact. So as you can see, guys, what was notable to me, the reason I bring this up is because it's been a while, at least 3-4 weeks, that I have not seen these major three components drop and stay red at the same time. Usually when that happens, it tells you if a move is real or not, right? If you see SPY go red or QQQ go red in the morning, mostly SPY, if you see SPY go red during the day, I always come down and check, okay, well, what's doing it, right? You got to know, where is the weakness coming from? And if I see that it's coming from technology, and technology is down like 1.5% for some reason, and financials and healthcare are kind of holding flat or slightly bullish, then I know that it's mostly being influenced by technology and it's not a broad market drop. But when you start to see all three of these major components hit the lows at the same time for a consecutive amount of time, right? Over an hour, 2 hours, 3 hours potentially, then it starts, a light bulb goes off in my mind and I start to think, maybe the bears are actually trying to prove something to us. And they're trying to say, hey, look, guys, we're actually here on this one. This is a real move to the downside, right? So that's what I was looking out for. But then, it kind of tapered off right around 11 o'clock Eastern in the morning. And then I was able to see the sector rotation happen. And that's when I said, okay. So it's just another one of these days, kind of like prior days, where we got some really, really heavy bear volume off the open for an hour, 2 hours. But then there was no actual follow through, no desire from the bears to actually, really crash through the moving averages here and cut so deep into the recent move that it becomes almost impossible for bulls to V-shape recover. So that's what I was looking at today. Fortunately enough for the bulls out there, it was another day in which we were able to recover after the initial drop for a, greater part of the day. So SPY, kind of another non-event day. We're really grinding higher. We're still struggling with this resistance area, guys, up here. We're still struggling with this resistance area. So, kind of unfortunate that we're not able to crack it. But don't forget, we're also waiting for very, very big earnings. And the big earnings can either do one of two things, right? So we're talking about Apple, Microsoft, Google, Amazon, the larger components of the S&P 500. Major earnings, if they all go one way, we could either do this, right? Which would give us a potential daily downtrend, right? If we break this area. But what it would actually do, it would just be a weekly consolidation move, right? Only a weekly consolidation move. So I wouldn't even be too nervous if that did happen, to be honest with you. But on the long side, the earnings may be the exact thing we need to actually smash this resistance, right? If we get good earnings, like let's say 2 out of 4 are good, we could actually break through this entire area right here and then continue the trend to the upside, break this, like look how thick this area is, guys, right? It's super thick, right? 1, 2, this is kind of like a false breakout, right? So you can even argue that this is 2, 3, 4, now 5. Like 5 times we've been struggling, right? This is over almost a year of resistance at this point. So it stands to argue that we do need something big. We need some momentum to smash through it. So that's what I'm looking out for, guys. In my opinion, earnings is going to make or break this resistance area, right? So moving on to NASDAQ, QQQs, right? So kind of the same composure as SPY, exactly the same thing this morning. So we had a drop and then didn't really recover. I assume that people didn't want to place too many bets today, right? Wall Street didn't want to place too many bets pending Netflix earning because Netflix always reports first in terms of the big tech companies. And they kind of set the tone. They really do set the tone for what to expect during the entire earnings season. If they miss, how does the market react, right? So if they miss on, let's say, an expected move of 6%, do they go down 15%? Do they go down 30%, right? So last year was absolutely ridiculous. We were getting these massive drops off of earnings, right? This one here, 21%. This one here, 35%. And they were missing, right? But the moves were absolutely crazy, right? So people I assume that these events are fresh in people's memories and they didn't want to overcommit leading into today's earnings. So that's why we kind of had a muted day for the most part. And we're still grinding, same as SPY, right? Still grinding the 12 EMA. Bulls are still in full control, in my opinion. Like I said, for technology, right? This resistance area is also probably going to be made or broken with the remainder of the tech earnings. We can either break down here into further weekly consolidation, which would be very healthy because the higher low is right here, or we can move higher like this. And both would look decent on the chart, right? This is still a weekly bull flag. Still a weekly bull flag. So very healthy chart. It's just unfortunate, for the better part of the last 2 weeks, haven't really been doing much, just consolidation at these higher levels here. So we're going to wait to see what earnings does. And another reminder, once again, guys, just want to say it again, guys, don't be too greedy on earnings plays. You can make a lot of money on earnings plays. This is true, but you can also lose a lot of monies, right? Like earnings can, just like this resistance area, right? Earnings can make or break an account. You would really hate to see, all of this work that's been done for the last 4 months at this point be taken away because you over leveraged in one bad play off of speculating on earnings, right? What I'm doing on Netflix is not so much, I'm premium farming. I'm not saying, I'm saying I don't expect the stock to go here. I'm not buying a 380 call and saying, yeah, for sure Netflix is going to go up here. Like, I don't know. That's the reason why I choose these levels. Like I truly don't know. I can read as many financial articles as I want to. I can analyze their balance sheet and their cash flow statement and their past guidance and everything they've released over the past quarter. But you can only do so much in terms of expecting, right? So the market makers are usually better at us than expecting moves and pricing in moves, which is why I go with the options expected moves and make my decisions off of there, right? I'll be 1 to 2 standard deviations. It's really just a fancy word for saying if the expected move is 6%, I'll go 12 or 18% off of that expected move, right? Just to give myself a decent margin of error. Because when you go that wide, like I was saying, it's always 95% plus probability that you will be correct. There'll always be that one time, right? Those 5 times out of 100 that you won't be. But I'm also very picky with the companies that I do choose to do this on, right? And look at this level, right? This was a perfect support level, right? This is at this point a 4-month support level that's held up now twice, 3 times you can argue. So it's not as if I just pulled this level out of nowhere. So that's what I wanted to mention, guys, for the tech earnings and QQQ coming up. Dow Jones, was another, kind of just not much to say, guys. There's really not much to say here. I mean, the boomer plays are still doing good. I call them the boomer plays because that's pretty much the components of the Dow Jones, right? The more legacy companies that have kind of plateaued in terms of, exponential growth, and that now are allowing themselves to pay dividends or do share buybacks and all that good stuff. So Dow Jones kind of muted, but I mean, look, like we're still super strong here, guys. Dow Jones, like I was saying yesterday, still only about 5-6%, right, off our all-time highs. Only about 5-6% off of our all-time highs, maybe 7, yeah. And also the formation of this would look probably better on the 2-week time frame, but it's still an inverse head and shoulders in my opinion. You could say it used to be this and it's invalidated, but if I would go up a time frame to, let's say, like the monthly won't show it. You need maybe like a 2-week time frame or whatnot, but it is still that pattern of, low, higher high compared to this, right? So this is a monthly. At this point, the monthly higher low seems to be set for the Dow Jones, right? And just overall bullish. Monthly chart holding the 12 EMA. So I wouldn't be too nervous. I mean, apparently these companies can still just grind higher. That leads me into one of the other trades that I was looking at while we're actually here. Dollar General. Look at this 200-week moving average, right? 10 years of data. How many times is it broken below and held below? Gets rejected every single time, right? As you can see, guys, gets rejected every single time. Here was no different, which is why I was writing options in this area. I hadn't had my YouTube channel up, unfortunately for you guys, but this is another play that I was taking back in the day. Picked up some shares, wrote some puts as well, and now we're just kind of riding it upside for that good mean reversion trade that we want, guys. You're going to hear this on this channel a lot. We want the mean reversion trades. The trades that have extended too far to one side and that are now in a technical area of good value, as well as obviously great fundamentals, good margins, great cash flows. Dollar General speaks for itself. I mean, they increase revenues every single year. Margins aren't so great, but I mean, they just pull in so much cash and have a very, very attractive valuation, right? They're trading at about 20p price to earnings, which is under the S&P 500 right now. Very, very, very good company. They do not only they do well in a regular market, but in a recession when people have less money, right? Where do they go shop? If you're trying to save money on everyday items, what stands to argue that you would go shop here, and you would also go shop here, and you'd also eat here instead of fancy restaurants, right? So it's all about product substitution. Product substitution, guys. Very important concept. So moving on to Russell. Russell, once again, kind of still holding on to our bottom range here. I mean, I feel like a broken record at this point, guys, right? Because you know the drill. You know the drill. Anything in this area is an attractive price level for me to be writing options off of. Unfortunately, wasn't able to get much premium today because we are Tuesday and the day wasn't really red. If we would have, it didn't really, I mean, off the gap down, it did move down 1%, right? But it didn't put us close enough. IWM is better. it didn't bring us close enough to this green line here, to the 170 area. So I couldn't get enough premium. I was looking for about 0.5%, couldn't get it. I did look at it though. I look at this thing every single day. And unfortunately, wasn't enough premium on it. But like I said, we're still trying to grind higher here. We're now trading above our 12 and 26 moving averages here. We're using them as support at this point. What we're trying to do is we're trying to confirm a weekly trend change, right? It's an ugly one, I'll agree with you, within this range, obviously, right? So it is an ugly one. However, that's what the bulls have to do, right? Now we're kind of trapped in this little range within a range here, right? The bulls tried for the daily breakout, but we're not getting it. Struggling with this resistance here. So bulls are really going to want to push up higher into this level, maybe reject from the 200-day moving average, do something like this and get back up to these higher levels, get back up to the top end of this weekly range here, right? So that's what we're looking for on the Russell. I mean, as I said, over the weekend, I'll be doing some big research into smaller cap stocks. I talked about one yesterday in the plays, which we'll go over at the end again. And that should be pretty much good for the Russell. I did want to bring up Bitcoin here. Bitcoin is doing absolutely wonderfully, in my opinion, right? So we did have a classic setup here, guys. So the breakout retest, right? So here's our support. Obviously, it's not an exact, you could call this a range and whatnot, right? You could draw a channel, all that good stuff. Perfect, okay? The essence of which is we were looking for previous resistance, which was a very big resistance. Look how long we struggled with this area right here, right? Very big area of resistance. And now, funny enough, we're using that exact same area as support. So I was looking for a pullback into this area. But when you combine it, this was a very quick move yesterday, guys. Very fast move to the downside. Whenever I see a quick move to the downside, I look, do our lower time frames get oversold? And as you can see, we were cutting deep in the RSI right down here, right? Deep cut into the RSI. And as soon as this MACD started changing, as soon as we got the confirmed uptrend on the hourly RSI, I was interested for a second load up of a position. So that's exactly what happened. That's exactly what I did in one of the crypto futures accounts. And this was about last night. I mean, this was a very good trade. You could have got this trade yesterday around 8 p.m. The trade was available all day. I waited for the 4 hour to play out more. So I was getting in around here. The exact moment where I got in, guys, I will show you is here, right? Right around there, last night. Why? Because I was waiting for the 15-minute trend to confirm an uptrend. As you can see, guys, no confirmation of 15-minute uptrend, truly. But as soon as I saw this pattern here, and then bulls engulfing the entire move back. Look, drop, moved up only 30%, faded. Drop, came back up, not even like 25% of this drop, and then kind of faded again. But then we got the third leg down, right? Broke these lows, made a new low. We got this third leg down, right? And then what happened? Immediately, the bulls engulfed the entire move. When I saw that, I said, whoa. Okay, so now the bulls have taken back the 15-minute. What's happening? We were oversold on the 15-minute. We were still over. Oops, sorry about that. We were oversold still at a certain point on the 1 hour time frame. This is this area right here that I was showing you guys, engulfing on the 1 hour as well. Bears were not able to force the lower lows on the 1 hour time frame. Took the trade right here for continuation. Very easy trade. Was targeting the higher end of this range. We got it today, and that was the bull move for today. As a matter of fact, right now, what we're doing is we're actually kind of forming some sort of a cup and handle on the 4 hour, which is actually beautiful. So you see the 4 hour was oversold and the 1 hour was oversold. The lower time frames were all oversold. However, on the daily, we were just looking for a retest of this area. So that's when you have confluence, right? Confluence. You have your shorter time frames getting oversold, but you know that on the daily, you're looking for them to come down into this area. So if you can combine the shorter time frames being oversold with a massive support level, you usually get a bounce trade. You never know if the bounce is going to top up here or the bounce is going to top out here or if it's going to moon, right? You never know. But the least you can do is target, right? Is target the previous area. I was just targeting it up here, guys. So we dropped from here. My target was right here, right? This previous area right here. That's it. I wasn't trying to shoot for the moon or whatnot. That was my first take profit. Took 30% off the position. Now the stops go under there, and then we ride the trade pretty much for free, right? So very, very simple move on Bitcoin. Bitcoin really holding the 12 EMA, right? We still didn't really close below it by much. This chart is still looking very, very bullish to me. Very, very nice chart on the weekly as well. Still bullish. No concerns for me. The bulls have proven that they want to show up for the dip buying. So, you know, we'll take that. Ethereum didn't really drop as much as Bitcoin. However, if you're comparing this, guys, it would kind of be wrong, right? Bitcoin lagged the breakout. So the actual Ethereum breakout was this one, right? Range, breakout, retest, exactly like what Bitcoin did, and then further continuation. So keeping that in mind was another thing that I was confident in my trade, in my purchase of Bitcoin last night, the swing trade. I do have some long-term Bitcoin, guys, that we're not selling, that we did pick up, you know, Ethereum as well in the lower levels, right? And then in a true DCA fashion. However, purpose of this video is not that. We'll show you the long-term portfolio eventually as well. And the breakout on Ethereum was this. And as you can see, retest this area of support, further follow through. What are we looking for in Bitcoin? Breakout, retest of this area. Now we want the follow through. All right. So that's what I'm looking for in our major crypto. Ethereum, I mean, I wouldn't be surprised if Ethereum kind of does nothing, if that makes sense. Maybe even just consolidate sideways or slightly to the downside while Bitcoin takes over the move. Because if we're looking at the ETH BTC chart right here, you know, it did make a higher high right now. However, what's happening is we're pulling back kind of hard, right? So even though we might pull back into this area, whether we pull back into it hard or not doesn't really matter. That just means that Bitcoin's either going to run hard or it's going to just run a lot harder than Ethereum can. That's all this chart means, right? They could both go up. It's just Bitcoin might go up faster. Or if Ethereum stays flat and Bitcoin doesn't move a lot, this chart will still go down. But we are expecting this chart to further go down for a bit more consolidation before maybe Ethereum takes back the lead again. So they've been kind of playing this cat and mouse game, right? Ethereum led the breakout of the range. Bitcoin caught up. Now Ethereum did the breakout retest and move higher. Now Bitcoin is doing the retest and potentially we get the Bitcoin move higher, right? Like we've been saying. So that's pretty much it for the crypto. And we're going to be looking out for a lot of these altcoins soon. If we can really confirm that this is indeed a true move, then there's going to be some opportunities in a lot of coins that I wanted to talk to you about. Specifically, Uniswap and Link are two of my favorite coins. And look, we had another beautiful day on Link today. Not surprising. That's pretty much it for our crypto segment. Now, moving into our big tech. Going to go over these quick, guys, because in my opinion, they're not really going to have too many big moves until we get their earnings. Give me 2 seconds. Got to get the coffee. Not really going to have too many big moves on Apple, Microsoft, Amazon, and Google, to be honest with you. They're kind of all doing the same things, right? Apple, you know, struggling with the recent highs a little bit. Today, you know, it's kind of exactly the same chart as QQQ, right? Everything dropped in the morning, kind of slightly recovered during the day. So Apple, we're still looking for our major areas of resistance up here. So the 170 to 175 range is going to be our next level of resistance for this up move right here. Bull's still in full control, guys. Very, very uninteresting chart. Full control of the weekly, full control of the daily time frame. It's really going to rely on earnings. And as you can see, earnings are coming up here in about 2 weeks here. So Apple, I wouldn't be surprised if Apple kind of just maybe consolidates to the high here. It could move slightly higher, but then come back down and whatnot. But in my opinion, if you want to break a very solid area of resistance, like these guys up here, right, you were really going to need to see what's happening with earnings. And if the market consolidates to the downside, well, we do have so much space, guys, to set the higher low. So much space on the weekly time frame. So don't get impatient with it. Don't chase the market, right? Looking at Amazon. Good old Amazon. Amazon, our poor laggard. He's lagging so hard, guys. You know, he must be jealous at this point. We're lagging the market so hard. But it's normal. Like I was saying in yesterday's video, guys. I mean, their margins are not that great anymore. They're pivoting from the retail business to their AWS business, which has higher margins. But their retail business, you know, it's plateauing. They've already conquered the world. You know, like everybody has, there's only so many new markets that they can go into. There's only so many new factories that they can get into before they really, you know, they're kind of like they've saturated themselves, right? So you unfortunately don't get the exponential growth curve anymore like you would something like Tesla, which is still in its expansion phase, right? So Amazon is in the last phases of its expansion phases for its retail business. Not talking about AWS and its cloud services, but for its retail business, yes. Kind of lagging behind the market. Getting into somewhat, you know, this in terms of a mean reversion trade, Amazon doesn't trade much under its 200 weekly, you know, in its history. I mean, most tech stocks, not all, but they mostly have all been under their 200-day moving average. Like if we look at Google, week moving average, we look at Google, we literally just recaptured it recently, guys, right? So it's not as if Amazon's an outlier, but we are looking for at least some mean reversion to that 200 MA, and some decent earnings could definitely do that for them, right? So still kind of trapped down here, not really doing too much. This chart is really messy, to be honest with you, right? So we did set a weekly higher low, but now I don't know if bulls have the juice, unless we get some good earnings to set it right away. We may have to do something like this, right? Where we consolidate and get tight and accumulate around this $100 range and then eventually get a pop, right? So that would be my most likely scenario for Amazon stock. May not have the juice to do it right here. Like I said, guys, we're waiting for earnings though. At least we get them next week. We get those guys next week, so that'll be very, very, very interesting to look out for. But yeah, daily grinding the 12 EMA, grinding up the 12 EMA as the chart is right now. You know, we do still have, if we were going to do some weekly consolidation, like I said, guys, this can get really tight. There's no, you know, in my opinion, you know, short of a really disastrous earnings, there's no real negative catalyst that should be affecting Amazon right now, right? So Google, same thing we've been talking about, right? Google is in the breakout retest area. So we're retesting this area, which used to be resistance, which is now support. So we're really just testing them really above this green box range right here. Still so much space for weekly consolidation, right, guys? Above this higher low here. So same thing. Google earnings, right, is going to be next week, next Tuesday, as a matter of fact. So I don't expect, you know, very, very large moves on Google prior to earnings. However, if they do start tipping down into this green box area, this is when I really start getting interested to be writing some puts on. Because in my opinion, fundamentally at this point, not so much technical analysis, but those green boxes on my screen, guys, those are what are, in my opinion, good value on a fundamental level for the company, right? So at current price, 23, you start getting down to this box, we start looking at 20 price to earnings, right? 20 and below price to earnings, which is really good. Look at this, look at the growth, look at the margins, right? So it starts to be really, really good value. I really like Google. Google is probably one of my top 5 favorite stocks. As you can see, trading above the 200-day moving average still, not by much, but still. And we are above that 200 week. So now we kind of have a lot of levels to use as support. So I wouldn't be nervous about price crashing through here, you know, crashing, short of some really bad macroeconomic data, which would be weird at this point, because everything's kind of playing out as expected. Inflation's coming down, peaking out on the rate cycle and everything like that. But short of some really disastrous earnings, guys, I mean, you know, it'd be very, very tough for this stock to just break through these levels without having to really work for it, right? So if bears want this, they're going to really have to work for it, in my opinion, right? So Microsoft is really the outperformer. As you know, Microsoft and Apple, like you saw Amazon stuck in a range. You saw Google stuck in a range. But Microsoft, I mean, this stock just does not. So I should probably erase this. Let me just erase this channel because it's no longer really being useful for anything. Microsoft looks exactly like Apple, right? It's just a very, very healthy 3-month uptrend at this point on the daily, on the weekly as well. This chart is very, very clear, right? So bulls came back, reversed the weekly trend to the upside. Now we're in a confirmed weekly uptrend with a bunch of space. If we were to do weekly consolidation and use these levels as support, right, it would line up with our moving averages. Not only would it line up with our moving averages, but bulls are in so much control. Like if we were to pull down to here, that wouldn't even be 50% of this up move right here, right? Still so much space. Very, very healthy chart. Microsoft, they're next Tuesday. Yeah, they are next Tuesday. So next Tuesday, we get very, very big earnings. So if this stock is to do anything, right, if we want to push through this resistance, the 290, 300 area, we want to push through that. We're probably going to need earnings for it. Don't expect big moves before earnings on this stock. And if we're going to break down into further weekly consolidation into something like I was saying, we were also going to need earnings. But either or outcomes, guys, are still bullish. That's kind of my main, if you wanted to have one takeaway from this video, is that most of the outcomes from these earnings are bullish. Because we have so much space on the weekly timeframes for a pullback. Or what are we going to do if the earnings are bullish? We're going to smash through big areas of resistance, right? So not really many bear cases right now that are holding water, in my opinion. You know, Tesla. So Tesla. This one is interesting, right? So we are getting so tight. So this is going to break this week, right? It has no choice. We're either going to break to the downside and head towards here, or we're going to break to the upside and head around here. I would be very surprised if Tesla does absolutely nothing. It's always a possibility, right? We always like to think up or down, but sometimes there's a possibility, just like on Netflix, where we have big swings, but then end up doing absolutely nothing. You know, so Tesla's one like that. I mean, it could go, in my opinion, right? We already have the difference with Teslas. We already have the numbers. We already have deliveries. You can extrapolate kind of what they're going to be. So because they delivered more, they delivered less with some price cuts. There may be some cuts on the margins, but depending on the guidance and whatnot, and the status of their new factories, and you know all of that tying into their future production and their future growth, this could either be taken two ways. The negativity around the deliveries and the margins could take us down to test the lower end of this range, but I don't think it could be anything, well, you never know, but I'm not expecting it to be anything disastrous to where we would pull down into my deep value buy box, even though I would love to get it there, guys. Don't get me wrong. Like, I would love to buy Tesla between 150 and 130 again. If it comes back down there, I will be a happy buyer. I know there's still a gap to fill here, so it could always be a possibility, but it's also a possibility that investors are bullish because of the guidance that's provided and bullish because they are still growing at 35, 36, 37% a year, right? So this thing is going to move either way. Earnings tomorrow, big day tomorrow, definitely something to watch out for. And but as of now, we're just stuck. We're just stuck. Peep, it's a push and pull. Look at how ugly this is, right? Push and pull. So not much to comment there. You know, just been holding the 185 range. We'll see what happens tomorrow. Now, I want to move on to our plays of the day. So, the plays that we were talking about yesterday, Tesla, right? So Tesla, as you see how those premiums change when I leave my account inactive for too long? It's kind of strange. All right. So Tesla, if you want to play the earnings, right? If you're looking for 0.5% between 1%, so you have a couple of options here, right? You could do the, well, I'm personally not financial advice, right? I'm not telling you what to do. But if I'm looking to play between 0.5% and 1% plays, I'm going to be looking for, I already have my positions. You guys saw it in there. I was looking for the 170. So I personally did the 170s for just over 1%. I went with the greedy long. Sometimes, you know, sometimes when you have a decent enough average on something or whatnot, you know, and you can afford to take the risk and you know your risk reward, you can do the 1% greedy trades. I wouldn't be upset if I'm assigned Tesla at 170. I really wouldn't, right? So it makes no difference to me. But for somebody who has a slightly less aggressive risk profile than me, you know, the 0.5% range is now the 162.5s. So the 162.5s, guys, they put us right at the lower end of our range right here, right? So that's the closest support level. So that's what 0.5% would get you. Those are personally the trades that I'm looking out for tomorrow on Tesla for the earnings. Call credit spreads on Tesla, I wouldn't do it like Netflix. Tesla is one that, you know, if they go down, I wouldn't be surprised that they get some very good bid support. But if they go up, I mean, you guys know how retail treats this stock, right? People just load up the call side. They load up the call side. And sometimes the day after earnings, it gets a bit ridiculous. So the IV spikes, and it's kind of dangerous to be writing some short calls on this position. So I personally won't be doing that on Tesla. Bill was our small cap play. So as you can see, guys, Bill really didn't do too much since yesterday. I mean, they peaked out at about $79 something today. Really not doing too much, but as I was saying yesterday, guys, right? So the wait, let me refresh. Sorry about that, guys. Let me refresh this one as well. So Bill is one that where you're on 74. So we were looking at the 74 range, right? Yesterday on Bill. So Bill, we were looking at the 74 range. So as you can see, the low here, 69. I want it right around here, guys. Right around here, because I know that our support, our low of like the last 3 years, right, is down here, almost back to IPO price. The premiums are decent on this stock. It was an institutional favorite for a very, very long time before we had the, the crash of all things, essentially, in 2022. So very, 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 very good stock. They do... How can I explain this? So they do business to business transactions, right? So they're kind of an interface by which companies can essentially bill each other, right? So very, very good. They have very, very good AI software that they're using to do all this. Very good company. I like the management of the company. They were trading excessively rich, but now their valuation has come down some, right? They are positive EPS, but as you're seeing, guys, like they are making money, right? The reason is that they're reinvesting most of their profits into further expansion, as most growth companies are. Like I said, this is a company that I would put in the whole IWM Russell 2000 group. I don't know if they're actually in there or not. I guess I should know this. But these are one of our small cap stocks, right? So only $8 billion. It's a good play for me, good risk to reward. That's why I put it on the watch list for this week. And it won't cooperate. We're going to cooperate here. Thank you, sir. All right. So as you can see, our 74 is what we're targeting. That's about the 0.5%. 76, like I was saying yesterday, guys, a bit too close. A bit too close for my liking. So it'll be anything between the 73s and the 75s. Still available since the stock hasn't much moved. Still available. I personally do have one of these positions. As you can see, I think I showed it before, right? So I have these 75s, right? So we have the 75s here on Bill. And we're just going to continue to ride it throughout the week. If we get assigned on this one, doesn't matter. I like the stock. I don't mind owning the stock. I don't mind writing covered calls on the stock. So I went with the 75s. Less aggressive would definitely be down here in the 73s and 74s. And to wrap it up, our good old Charles Schwab. I can't say I told you so, but I did tell you so. And I told a lot of people when the banks were, crashing that, this was one that got unfortunately hit too hard for what it is. Too hard for what it is, guys. 14 price to earnings ratio. They pay a dividend, a relatively high market cap, but it is one of the largest institutional players in the financial sector down in the States, right? And obviously the largest conglomerate of brokerages. Guys, they pioneered the no commission brokerage game. If you're using Robinhood or any other, like TD Ameritrade, so they own TD Ameritrade. If you're using any platform that has zero commissions, they pioneered it, right? And that's why they have substantial margins, because a large part of their business is in the brokerage industry. And if you look, they just reported, well, I guess you can't see it here yet, right? So actually you can, yeah, they did post it. It wasn't there yesterday, but they did post it now. So as you can see, guys, despite everything, look at these margins. Still making substantial growing revenue on a quarter-to-quarter basis. Very, very good margins. Nothing to complain about this company. Very, very good. As you can see, you have it on the screen. I do have a $40 call still. You saw it in the positions page, right? I think I did show it to you guys. Did I have it up here in the positions? Yeah, you guys see my 40 call right there, right? So we do have the calls at the 40 strike. And we also have been writing, we wrote the 49s early in the week, closed them today. So we were able to close these today. And what did I do? We turned around and we wrote the 52s. So like I was saying yesterday, guys, we rolled them up. So the 49s were absolutely worthless. We got out of them about 4 cents. We got into them about 47, 48 cents, if I can't remember. They were absolutely worthless today because it pumped. And I rolled it up to the 52s because in my opinion, 52 for this stock is still a very, very good price. So we're kind of following the stock to the upside as it kind of sets higher levels here. As you can see, 52 used to be resistance. We're now using it as support, which is why it's now my new level that I've been basing my put writing off of to follow it up. So that pretty much covers it for the video, guys. I'm sorry, this one's a bit of a long one, but there was a lot of cover, right? A lot of cover, a lot of plays that I talked to you guys about. Most guys only do recaps, right? At least I give you the, some plays, some trade ideas and stuff to look out for. So if you enjoyed it, consider liking, consider subscribing to the channel. I love you guys, even though there may not be many of you watching right now. I appreciate every single one of you that takes the time to watch, right? And yeah, have a great day, guys. I love you all. I hope you guys had a good one. Take care, and I'll see you tomorrow.